Hello and welcome to this special online event on the launch of the report, The Role of the State in the GB Energy Market. My name is Ravi Gurumurthy. For those of you who don't know me, I'm the Chief Executive of Nesta and the Behavioural Insights team. Nesta is an innovation agency. We try and design, test and scale solutions to big life-changing problems. And we have three missions: a sustainable future, a fairer start and a healthy life. And we have three ways of trying to work towards those missions. We act as an innovation partner, working with frontline organisations, we build ventures, and we also shape systems and policies. And that's the context for this report that we did jointly with Baringa. As you know, there's been proposals recently on GB Energy, and the purpose of the report that we're talking about today was to try to influence that debate and start from first principles. What is the role of the state in the energy system? What problems need solving? Where can the state manage risk better than the private sector? I'm going to hand over shortly to Duncan Sinclair from Baringa and his team. And what we're going to do in this event is try to go through each dimension of the recommendations. So the role of the state as a planner, the role of the state as a pre-developer and as an investor and as an enabler. And Duncan is going to set out the overall picture first, and then we'll go through each of those four aspects. What would be great is if you could ask questions and put comments in throughout this process, and we'll try and bring those out in each of the discussions. Just one other final reminder, which is that there are closed captions and they can be accessed via the LinkedIn live stream. So without further ado, I'm going to hand over to Duncan to introduce the rest of the team.
Great, thank you, Ravi, and good afternoon. A pleasure to speak to everyone this afternoon. So my name's Duncan Sinclair. I'm one of the partners in Baringa, and for those of you who don't know Baringa, we're a 2,000-person independent consultancy based in London, but with global outlets as well. About 600 of our people are focused on the energy sector across the value chain. So lots of experience across the whole industry. Personally, I've been around for about 30 years, so seen quite a lot of change. I lead most of our policy and market design work here in GB and internationally, and have been the lead for this piece of work on the Baringa side. I'm joined today by a number of colleagues. First of all, the co-authors of the report, so myself, Lewis Heather, Alex Townsend and Andrew Chittenden, and importantly, four moderators who've come to facilitate the conversation, who I'll introduce as we go through. So that's Alexis, Vikash, Manon and Rob. So the way this is going to work, as Ravi pointed out, we are going to I'll give a quick overview of the project and some of the key takeaways, and then we're going to dive into the discussion in each of the four roles that we've identified for the state. So that's the planner, the developer, the investor, and the enabler. And each of our four moderators will give their reflections on each of those topics. They will ask questions, but also importantly, pick up some of the comments and questions that you're hopefully posting in the chat as we go. And we'll try and spend about 15 minutes on each of those topic areas. And by the end of that, should be about 3:15, I'll hand back to Ravi to give his sort of closing thoughts and to take us from there. Great. So just a quick overview of the report. So as we mentioned, this is a joint piece of work between Nesta and Baringa. We started back in February and we published our final report a couple of weeks ago, which hopefully people have seen. We have been engaging throughout with a very senior stakeholder group across the industry, and thank you for everyone who has contributed. So DESNZ officials with Ofgem, the various champions and commissioners, the ESO, developers, investors, and critically, Ed Miliband and the Labour team. And obviously, during the period of our work, the election was called, and you will have seen that some of the thinking, some of the ideas that are in this report have already begun to feature in energy policy. So, for example, the recent announcement of the partnership between GB Energy and the Crown Estate for pre-development work on offshore wind. In terms of the focus and the scope of our work, heavy electricity focus. We've generally focused on the larger scale technologies, so generation technologies, hydrogen production, etc. We've also been looking at transmission and distribution networks as part of our work. What we haven't focused so much on is the future of the retail market or decentralized energy and LCTs in-home technologies. And part for the reason for that was there was a separate team within the Labour group working on the local power plan, I should say. So we've been working closely with that team, but not directly part of our scope. And also, I should say that we were not focused specifically on the 2030 targets. You may have seen a separate study done by the Royal Academy on that, but again, we work very closely with that team to understand what they were doing in that area. So moving into some of the kind of the input to the work. So what were the sort of the overarching sort of problem statements that we were trying to address? I mean, first of all, I think it would be fair to say that we've made very good progress in this country in terms of decarbonising the power sector. So about 43 gigawatts of renewables on the system, one new nuclear plant in construction, another under development. We have CCUS, we have hydrogen projects under development. So we've done an awful lot. And the sum of all of that has meant that we have significantly advanced decarbonisation. So about 80% or nearly 80% of the power sector has been decarbonised since 1990. And we are around halfway to net zero in terms of the whole economy. So there has been some fantastic progress to date. But the challenges get ever greater from here. First of all, the original plan for the previous government was to try and decarbonise the power sector by 2035. The new government is suggesting 2030. So that's a very significant challenge. And then we need to potentially double the size of the electricity sector by 2050 to meet the net zero commitments, given the level of electrification that's planned as part of that. And we estimate that there'll be a need to spend around 350 to 500 billion pounds over the next 10 years just to achieve some of those objectives. So in terms of the sort of three overarching problem statements, if we can just go back, Derry, to the previous slide. Thank you. First of all, the need for greater coordination and certainty. I guess this is no surprise to anyone. This is a key theme that we are seeing, but some of the challenges that we're facing. So for example, the connection queue, as of April this year, there was about 700 gigawatts queuing to connect to the networks. That has risen significantly since then, and I think we're looking at close to a terawatt by the end of the year. So a massive challenge in terms of connection. A lot of the projects that we're trying to develop are getting increasingly complex with very complex value chains, particularly for CCUS and hydrogen, but also offshore grids. The desire to to develop offshore hybrid assets, multi-purpose interconnectors. These are very, very complex projects. And a lot of the decisions around those projects are dependent on other things going on in the value chain, and that makes it extremely difficult. We have to decommission the gas grid, which can't be done simply. It has to be maintained until the right moment it can be decommissioned. There are very significant challenges around the supply chain, and we'll come back to this topic throughout the presentation in terms of the ability of the supply chain to respond to the demand coming and the need to coordinate the development of the supply chain with the delivery of energy projects. And that's just to name just a few of the challenges around coordination. We're certainly seeing significant developments in this area. So we've had things like the holistic network design on the network side, the proposals for the strategic spatial energy plan, all very helpful in terms of understanding the picture better, but is that going far enough in terms of the need to sort of centrally plan and to coordinate? To pick up the pace, already mentioned the connection queues and the supply chain challenges, but we're estimating that we're currently deploying around 10 to 15 billion pounds a year into the sector, which is about 20 to 40% of what we need in order to achieve the decarbonisation objectives. So we need to at least double, if not triple, the rate of capital deployment in the sector. And also, we have a very, very heavy reliance on new technology if we're going to decarbonise not just things like renewables and mass power production, but flexibility and storage. Then we are relying very heavily on new technology, which is yet to be proven in some cases and deployed at scale. And then finally, we need to ensure good value for money. Certainly, we've seen the market and the competitive process, particularly around things like CFDs, driving very significant cost reductions to the benefit of customers. But we are moving at incredible pace now. And therefore, we have this paradox between the desire to create competitive processes to make sure that we are getting the best value for money, but also having to take as many projects as we can and to develop them as quickly as we can. And that is a situation where the risk, if we try and do too much too quickly, that we may end up overpaying for those investments. And also the risk of significant inframarginal rents. And we identify this in the report, whereby if we're trying to procure multiple technologies with different costs through single auctions with a single clearing price, there's a risk that you end up overpaying for some because the price is set by the most expensive technology at any one point in time. And our estimates of that could be worth as much as £35 billion a year by 2050. So pretty significant. So there's a few challenges that we were looking to try and address through some of the proposals in the report. So moving on in terms of some of the recommendations, I mean, I think first of all, it's worth saying that, one of the key recommendations is the role of the market is still critically important in delivering this. It's deployed massive amounts of capital already. We have a fantastic set of developers, investors, financiers in the market. There's a lot of ambition. There's a lot of expertise, which is fantastic. So there's certainly nothing to suggest that the state is taking over or displacing all that good work that's going on. But we did identify 4 different areas where we felt the state could take a bigger role than it is currently today. So as the planner, and we'll talk about this in much more detail, we identified the need for a system architect to take more decisions around the choice of technologies and the locations that they should be built. A more active role for the state as the developer, again, not to displace private sector developers, but to bring or to do the pre-development work, to bring some projects to market more quickly in order to be able to facilitate not only faster decarbonisation, but also potentially delivering better value for money for customers as well. The role as an investor, and in particular, we focused on the value government can bring by investing in emerging and nascent technologies and trying to crowd in additional investment from the market. And then finally, the role as an enabler in order to do things like planning reform, which is obviously a key area that the government is already focusing in on, but better coordination around things like supply chain development, innovation strategies, and also we pick up on the issue around public sector energy procurement as well. So those are some of the kind of the key headlines in terms of the different roles that we evaluated for the state to play. And then the purpose now moving forward is to look at these roles in a bit more detail. Just very quickly before we do that, this schematic, so there's a lot of detail here, is taken from our report at the end. And what we tried to do with that was to map the different aspects of the different roles for the state onto the institutional landscape set out by the development life cycle. So you get a sense of where some of those new roles might sit and how that might work with either existing organisations, but also, as you can see, we've highlighted sort of speculatively a potential sort of a footprint for GB Energy, the role that GB Energy could play across those roles, and clearly a key area of focus for the new government, given the announcements around the intention and aspirations for that organisation. So we may come back to this slide as we go through the Q&A, but hopefully this gives us sort of a sense of how it all might fit together across the different areas. Okay, so let's dive in and talk about the first role, which is the role of the state as the planner. So we've pulled out here 3 kind of highlights in terms of the recommendations. So first of all, the role as the potential system architect. So what do we mean by this? This is having the state playing a more proactive role in deciding technology choices and locations, with the intention of trying to align that more closely to the development of the network build out and the requirements of different customers. So to some extent, this is happening already, but we were thinking to take this to the next level in terms of how the system is developed and how funding is awarded across the system. So as part of the system architect role, we imagined that it would take decisions or make recommendations on the appropriate mechanism for bringing forward different asset classes. So for the very, very large low carbon projects, to be sort of site-specific, location-specific tenders for particular projects. The second category was around targeted tenders, so identifying the types of technology and the types of locations that will be needed by the system, but allowing the market to decide the exact projects to be brought forward. And then finally, the retention of the universal agnostic models like the capacity market and the CFD, whereby projects can come forward, respond to the signals either through the wholesale market or the network charging in terms of location to maintain those mechanisms. And that would probably apply more for the smaller scale technology. One of the kind of key questions that we got into was how do you make a strategic plan strategic if you only have a relatively short forward view of the amount of funding that will be available? And so one of the key recommendations we have in the report is for the system architect to have greater forward visibility of the amount of money available to spend, not just in terms of things like CFD budgets, but also in terms of network infrastructure, because ultimately the optimal decision around how best to develop the system has to optimize across various different vectors and dynamics. And therefore, if you're trying to do it piecemeal, you may not get a fully strategic plan. So the recommendation was to try and provide greater forward visibility in order to make those recommendations going forward. In terms of the institution to do this, I mean, I guess the obvious role would be with the NESO, and that was our recommendation. Certainly now it's being transferred into public ownership later this year. It becomes more appropriate for a publicly owned body to be taking a more proactive role in deciding and shaping the future energy system. So what we were thinking here was it would be a natural extension of the NESO role. There is a lot of open questions about exactly how much autonomy the NESO would have, the role of DESNZ, Treasury, etc., and Ofgem in oversight in terms of decision making and the governance around it. But the firm recommendation was for the NESO to be able to take a more leading role in determining the strategic plan. In order to do that, of course, it will have to further develop capabilities, and skills have to be incentivized appropriately. So it's by no means an easy undertaking, but it seemed like an obvious place or an obvious extension of their role. So that was just a quick highlight and overview of some of the recommendations around the system planner and the system architect role. I'm going to bring in a colleague of mine, Alexis, who is one of our directors in the network business, who has been actively involved in all things to do with connections, network planning, DSO transition, and would welcome Alexis's thoughts, reflections, questions that are coming through on the chat related to this particular role.
Perfect. Thank you, Duncan. I guess just to share my initial reflections, as Duncan knows, I tend to come at these things from quite a practical perspective. So I think it'll be really interesting to work through how this will work in practice. So thinking through like how will the governance of the strategic plan work? For example, like what opportunities will broader industry have to engage in the development of that plan and the frequency of updating that plan. So yeah, I'm really looking forward to working with government and broader stakeholders on that kind of next stage of implementation detail. But yeah, I guess moderator privileges, I can ask my own question first and then we'll take a look at the chat. But in the report, we talk briefly about coordinated planning with the RESP, and we know that Ofgem published their consultation on RESP last week. So I guess from a planning perspective, how do you see some of those bottom-up plans, like the local area energy plans, for example, coming together with some of that top-down strategic planning? And what do you think the interaction could be between that kind of third bucket of investment you talked about earlier, so the market mechanisms for smaller technologies, with the proposed local low-carbon development zones?
Yeah, so it's a really good question. I think the starting point for the system architect is at the top end, the big stuff. So the big questions around offshore wind, hydrogen, nuclear, etc., and making sure that the network plan is coordinated with the deployment of those projects. But of course, they would also have to take a view on what's happening in terms of decentralized energy, because it's not as if the strategic plan is going to be determining right down to the smallest installations where everything should go. So it needs to be able to accommodate that uncertainty and understand what's going on there, whilst providing a little bit more kind of direction from the top. So it will be a bit top down and it will be a bit bottom up. And I think the system architect will have to really understand what's going on the ground in terms of where projects have been developed. And the rest, obviously the proposal is for the rest to be part of the NESO, to some extent could be the conduit of that sort of top down shaping and the bottom up information, what's going on the ground. And so that's the way it potentially could work. Obviously the RESP concept is very new, the capability has only just been developed, and the sort of first step of that is going to be very much around information sharing and data and just getting a much better understanding of what's going on, trying to come up with common scenarios to be deployed between the DNOs, the GDNs, the TOs, etc. So I think that will be very much its first incarnation. But as the risks develop and as the pace of change needs to pick up, then you can see a situation where it's playing a role alongside the system architect and beginning to shape a bit more what's going on the ground. So being much clearer where we can develop projects, which zones, which areas, and making sure we're very cognizant of the need on the ground and where the connections are coming in as well. So, I think the rest will play that role and will be a real bridge between the different actors. As I said, the DNOs, local authorities, and the NESO and its kind of slightly transmission side of its thinking as well.
Okay. No, thank you, Duncan. I think I'm allowed to ask a few more questions while we wait for our audience to get more involved. So I guess thinking about connections reform, Duncan, which you kind of touched on that interaction and obviously all the challenges around 700 gigawatts in the queue, etc. This strategic architect role will obviously be very challenging, lots of interactions, but what do you think the next steps are for kind of considering that interaction with connections reform and kind of how much this new role could help resolve some of those challenges?
I think on the connections reform, in terms of the progress that's been made, it seems to be that we have to go to the next stage in terms of being a bit more directive in terms of the types of projects that we want on the system and where, because I think the attempt so far to try and manage the queue in terms of readiness, etc. I mean, obviously there's a lot of benefit to that, and that will yield further benefit. But will that be enough to get the connection queues down to something manageable? And so people are asking the question: do we actually now need more direction in terms of how many batteries do we want where, how much solar do we want where? And so to some extent, that's what we see the system architect beginning to do. Now, it is a big change and it is controversial because you're going from a very much a customer-led bottom-up approach to one where you are beginning to get more direction coming through a central planner. But in reality, if we are going to meet the targets or the ambitions, then something has to give, and it may well be that's what has to give. So it's very relevant, this, for connections reform and where we go next with connections reform. But we'll have to see how that evolves.
Perfect. No, thank you. Okay, last question from me is around kind of implementation. So you talked around the schematic and I guess the evolution of NESO's role potentially. What do you think some of the biggest implementation challenges will be as we kind of try and make this reality?
Well, I think definitely skills and capability, just in terms of just the people and the tools and techniques that we're going to need. That's a big change. I think the governance question is going to be quite an important one to lean into as well. Who's making what decisions when, and how do we make sure that we can make that as efficient as possible, so that we're not kind of creating bottlenecks. So I think that's another key challenge. But also, bringing the industry along as well, and making sure that investors, developers see this as an opportunity to accelerate projects and deployment, and not as a fundamental change to their business model. So that is going to be another key part of it as well. But I think to carry on doing things as we're doing is not going to get us where we need to be, and so something will probably need to change, and therefore some of the things that we've held dear for a long time in terms of the role of the market versus the role of the state, the pendulum is shifting a bit, certainly for the time being, and not necessarily forever, towards more central planning and more direction coming from the state.
Perfect. No, thank you, Duncan. Got a private Q&A. So maybe that kind of moves us on to our next section.
Okay, thank you, Alexis. So moving on to the next role, which is the state as the developer. Great. So in the report, we identify a number of different roles that the state could play, and all of those roles we think could actually be candidates for GB Energy. First of all, the one we're looking at is for the pre-development of large-scale low-carbon assets and infrastructure. So by that we mean offshore wind, hydrogen, CCUS, nuclear, potentially offshore grids as well. Now, to some extent, this is already happening. So we have GB Nuclear doing a pre-development role for SMRs. We have the Crown Estate doing more and more pre-development work as part of their offshore leasing. So this, to some extent, is a sort of an extension of that concept. But the idea would be, in order to expedite things, for the state to bring forward projects, so and then to compete or to auction those projects back to the market. So rather than necessarily having inter-project competition, we have competitions for projects, and this looks increasingly like some of the models we're seeing elsewhere in Europe, particularly for offshore wind. And as we come on to the value that the state is creating through that role, potentially can then be delivered back to customers either through lower CFD prices or equity stakes in the projects, and we'll come back to that. For offshore wind, in the report, we recommend moving from a two-stage leasing and CFD auction process to a single stage, which is a pretty radical departure. So just by a way of recap, at the minute, if you're developing an offshore wind project, many different phases you have to go through, but you have to separately acquire a lease for the seabed, and you're doing that without any certainty at that stage about whether you will or will not be getting a CFD through a subsequent auction. That creates potentially some risk and uncertainty, and some of the option fees we're seeing for seabed leases have been very, very large. But again, there's no guarantee of getting that return through a CFD. So we think there's a lot of benefit in aligning those two processes. That's not straightforward because there is still a question mark about when is the right time to do that, and how much uncertainty and risk is still within the project, and how much of that development work is done before you get to market. But we still think there is a case to be done. The other issue here, of course, is that a number of seabed leases have already been allocated, particularly in Scotland with ScotWind and Intog, but to some extent England and Wales as well. So this is not something that we could cut over to straight away, but we think is potentially a good enduring model for future leasing. So that's for some of the larger scale projects. But we also think there is potentially a role for the state as a pre-developer for smaller scale projects as well. And this starts to link into the thinking around the local power plan from the Labour government, whereby the state, GB Energy, for example, could work in conjunction with local authorities, devolved administrations, DNOs, etc., and the RESPs to identify potential low carbon development zones within particular locations and organise tenders for development of projects in those zones. So, for example, tendering for a number of megawatts of solar or batteries or wind, and the successful projects would then be awarded, planning, connection agreements, and potentially offtake as well. And the value created by that process could then be returned through back to local stakeholders, either directly or through equity stakes in the projects that get developed. And then the sort of final role as well for the state potentially is to develop projects on public land. So that happens, of course, currently today. A number of different public sector bodies develop their own renewable projects, for example, but there is the possibility of a single organisation taking that responsibility more broadly on behalf of the public sector and helping to accelerate and develop projects on public sector land. Again, those could be developed ultimately and owned and operated by private sector players, but the pre-development of those projects could be brought forward through by the state. So those are a number of potential roles that we saw for the state. And as you will have seen in the recent announcement, certainly the first of those around offshore wind, a partnership between the Crown Estate and GB Energy was announced, whereby the Crown Estate could play that sort of delivery body arm on behalf of GB Energy to start pre-developing some of these projects and bringing them to market. So that's a quick outline of some of the proposals in that area. I'm going to bring in Manon Durrell, who's another one of our directors, who leads a lot of our work on renewables economics, particularly around CFD auctions, both here and internationally. And Manon, I'm sure you will have perspectives and challenges and thoughts, so interested to hear your thoughts.
Yeah, thank you, Duncan. I think you've started to allude to some of my thoughts already. In the offshore wind space, this makes me think a lot about a move toward a slightly more European model, where the state has a greater role. So in many European markets, you have a single stage allocation. Sometimes this allocation just gives the seabed, sometimes it gives both of the seabed and the CFD, for example, in France. So it sounds like a transition towards a slightly more integrated model with a competition for a single site. Something that's actually interesting as a market example is Ireland. And in Ireland, it's actually undergoing this transition right now, where ORES 1 was still a developer-led model, so very much like the UK, perhaps not with an initial seabed stage, but more similar to the UK. And now ORES 2.1 is also moving towards that more kind of planned model. So I think it'll be also interesting to draw the examples from those markets, both where it's an established model, but also from that transition that's currently taking place in Ireland. On the onshore technology side, this makes me think of an example a little bit more further afield. So this is something that's being done in Australia, where the state designates renewable energy zones, and these are then tendered. They also share some connections. So I think, again, there's a few lessons around that design and what works well and what doesn't, that government could take inspiration from. So I think this is kind of my main takeaways from this, really. I think I've been also lucky enough to see that there's a few questions in the chat at this point. So there's a question from Sam around, is there an appetite for bundling several development activities? So, I think we've kind of touched on that already, potentially seabed and CFD, but also bringing in the connection support and additional planning associated with that.
Yeah, I mean, I think that's probably a question back for Sam as well in terms of the appetite for it. I mean, the assumption is that by bringing those things together, in time, for example, could actually then save quite a lot of time and effort. There's a lot of development risk associated with some of these bigger, more complex projects, and therefore, to some extent, by bringing the projects have gone through some of those stages already to market, that potentially is valuable. So that's part of the assumption around that model. And of course, if we can align it to the network plan and therefore be much more confident in terms of connections and timing, particularly for things like the offshore hybrid assets where you have the potentially very complex interplay between different projects, then that may allow those projects which really struggle to get through their various gates and financing because of just the inter-project dependency of them, and actually make those projects easier to bring together. And things like, for example, with hydrogen, one of the things we heard quite strongly is that, hydrogen business model is working quite well, but it's the physical offtake of the hydrogen that's the potential blocker. So again, if we can guarantee or align the offtake for the hydrogen with the development of the hydrogen production projects, that can then unlock the whole value chain and allow the project to be developed and financed. So it's these types of kind of examples. Now, I mean, obviously some of this has been tested. We've heard lots of different views on this. We've heard counter views, which is, the developers can do all this, what's the problem? And I think if time wasn't of the essence, then I think we would definitely be fully agreeing with that. But the problem is, if we are serious about hitting these really, really aggressive and ambitious decarbonisation goals, then we just don't have enough time to allow these things to come organically through the market. They have to be slightly more controlled. Now, we'll make mistakes. There'll be regret spend. There'll be some suboptimal decisions being made. Of course, there will be. But in the overall balance of things, then, if we are going to hit the targets, then we may have to take those risks in order to bring them forward.
The question around timing actually brings me quite well to the next question around, there's very strong ambitions towards 2030. And the question is basically what can be achieved in that time, and pointing out to a number of, problems to solve around connection queues, funding, execution, which are all big challenges. So what do you think is going to be feasible in that time frame?
Yeah, and this is the conundrum. To some extent, we were lucky in as much as we weren't focusing on 2030. We were looking medium and longer term, because there are potentially some trade-offs between going slower now to create a system which is fitter for purpose for the future versus going hell for leather now to get to the 2030 targets. So that is a key political decision. And in the report, we look at all the projects that are already in train, and try and identify how far could we get to 2030 just by accelerating the current projects. And you can get most of the way there. So this sort of change, REMA, any other sort of fundamental transformational change, possibly puts at risk the shorter term objectives, and you kind of can't get away from that trade-off. Now the trick is to do this in a way which is synthetic, so you're not jeopardizing the near-term targets, but you're not also going too hard on the near-term targets, and then you end up with a system that's just not fit for purpose going forward. So those are some of the key questions that I think are going to have to be answered over the next few months, because there are no easy answers in that respect.
Yeah, thank you. And I actually had a question myself, which also ties with one of the questions in the chat around, in order to deliver this, a number of institutions are going to need to be involved. And I suppose, there's going to be a reliance on existing institutions. So who do you think is going to be involved? And there's a question from Angus in the chat around any potential conflicts of interest between the NGESO role for system operator and then also being a system architect as a role.
Yes, in terms of the institutions, GB Energy was put out as a concept quite early on, and to some extent the detail behind that is only just beginning to emerge. To set up a whole new organization from scratch, again, coming back to the time question, is going to be extremely challenging. And so the model seems to be, which is how do we leverage as much as we can the existing capabilities? So the partnership with the Crown Estate, obviously GB Nuclear may well become more closely aligned with GB Energy. There will be partnerships, I'm sure, with private sector. There'll be partnerships elsewhere. So I think there will be a pragmatic approach to the family that is GB Energy as that organization itself builds up. And the same for the local power plan as well. Again, leveraging as much as possible existing organizations to bring that together. So it is a real entity. Obviously, it's got a chairman, etc. It's incorporated as a company, but it's also is a concept which will evolve and be fleshed out over time. So I think that's the way that will develop. In terms of Angus's question, it's a really good question, and it sort of comes back to, there's a sort of security supply question in that as well, which is, who's responsible for security supply in all this, and if you are responsible for decarbonising the power system and you're responsible for security supply, to some extent that's a good thing because it's all in one shot, but actually, is it something that's better to sort of separate those responsibilities out to create, greater visibility in terms of what's going on? I think that is an open question. I think, as I mentioned before, with the ESO becoming a publicly owned company, I think that does remove any sort of residual concerns about the commercial interests of National Grid, and so I do think that opens up new opportunities. There will be other challenges, I'm sure, but that does create some new opportunities. So I don't think it's infeasible for the NESO to play both roles, but it comes back to this governance question as well, which is, to what extent, how much is DESNZ ceding to this, to the NESO in this role, and other organisations. So there's a lot of detail to be worked through, and I'm sure the industry will have lots of thoughts on that.
Yeah. And I think a final question from the chat was around the impact on the queue position for new projects, and how that will also impact nuclear in particular, given the various delays recorded.
Yeah, so we've got to cut over from where we are to where we might want to be. On one hand, you could look at the queue and you can say, well, we've got way more than stuff that we're ever going to need. So isn't it just a question of getting all that stuff connected and then it's sorted? So, but it's what's in that queue, and is it the right mix, and is it in the right locations? And that's the challenge, and that's a function of where we've been to date in terms of very much the customer-driven approach versus where we may want to be. So there will have to be some decisions made around that and how best to do that, protecting people's existing rights, sitting in the queue, but also making sure that we are optimizing as best we can the finite amount of network capacity until we can add more to the system.
Yeah. And going back to the role of the state as a developer, what do you think are the next practical steps, and also what do you anticipate some of the key challenges to be?
Well, obviously we've seen some early announcements around that, which is good in terms of sort of direction of travel. There's a lot of detail around that, the role that the Crown Estate will play, how that works with Crown Estate Scotland, whether they just focus on offshore wind or do they start taking a role for onshore as well. So I think that's going to be key. The role of GB Nuclear, how that sits in, how the local power plan is going to be developed, to what extent does GB Energy want to get involved in other types of technology, CCUS and hydrogen. So there's some big questions around that. I think we assume that it will start relatively small and the concept will be proved, the capability will develop, the relationships, partnerships will get into place, and it will gather momentum. And certainly the government ambition is for GB Energy to be a substantial player, to deliver fast decarbonisation, low cost energy, and to be a national champion. That is the long-term aspiration. But the money behind it, the 8 billion or so, is not a huge sum of money. That doesn't go too far. So there is a question about how best to deploy the funds that are available and see how it develops over time.
Yeah, thank you. And I think a lot of it is about basically de-risking investments for developers, right, and facilitating this process.
Yeah, exactly.
Cool.
I just wanted just to return to the point around the. Great, thank you, Manon. Thank you. I just wanted to come back to that question around the competition for projects rather than the competition between projects. And I wondered if I could bring in Andrew at this point, because it's an area that you were exploring in great detail, Andrew, in terms of this fundamental challenge between if you need to buy all the projects to deliver the decarbonisation ambitions, then do you risk undermining the competitive process, and some of the thinking that led us to the conclusion that for certain projects it might be best to compete at the project level.
Yeah, I think that's spot on, Duncan. So just by way of brief introduction, I'm Andrew Chittenden, an independent advisor on energy policy, providing advice to the current government and the prior one, which has been an interesting process. And I did some of the early work with Nesta that led to this this piece of work being commissioned with Baringa, and I'm one of the authors of the report. Coming to your point, Duncan, I think that's right, and Dermot makes the point in the chat that we have to de-risk stuff for developers, and I think there is part of this is around de-risking and leading to an improved pace of deployment. But I think there is also a really important consumer angle to this, which is, as a nation, if we're going to try, if we want to buy most of the significant renewable projects that are available, and I think we will need to be doing that to hit the targets or to get anywhere close to them, then do we want to be buying them all at a clearing strike price where everyone gets paid the same price per project for the offtake? And do we want to be buying most of the projects that are in the pipeline? Because if you want to buy most, or if not all, the projects that are in the pipeline, then it's hard to get a competitive price for that purchase for the consumer. So I think part of this proposal around the state as developer is to try and achieve two benefits for the consumer. One is to say, where the state has some ability to assemble a valuable package, a seabed lease with a planning connection, with a survey done and with some outline, with an outline planning consent, that package has already generated quite substantial value that we should be able to recover for the consumer. And then the other point, which is the point that Duncan's making there, is we can then have a competition for that project between people who want to build and construct and operate that project. And the strike price that's secured for that project should then be a clearing strike price for the project, rather than for an auction as a whole. You know, and therefore we should, if we can construct that appropriately, and there's quite a lot of work to do that, then for the larger projects, you know, we could expect to pay the price that's necessary for that project to have a reasonable margin, but capture the upside beyond that for the value of the consumer. So that's definitely part of the thinking behind this.
Great, thank you, Andrew. Okay, let's move on to the third role, which is the role of the state as the investor. So first of all, sort of coming back to the point we just made around the role in pre-development, as Andrew says, you know, we think that is a sort of a valuable package to bring to the market, and so there is a possibility for that value to be realised on behalf of consumers and or taxpayers. You know, one obvious possibility is the project is just sold back to the market for development, and we're seeing that in some of the European models, for example. Another possibility is that in the competition for that project, you'd hope that the CFD price or the offtake price would reflect the fact that the pre-development work had already been done and the risk taken away, and therefore you'd end up with a lower offtake price, so that would flow through to consumers as a lower cost. Or the other possibility is you could decide what the offtake price should be for the project, and then the developer would have to then compete based on the maximum amount of equity is willing to give to the state to be an investor in that project, and then obviously the state is then taking the returns on that project as it's developed. So there's a number of different ways that could be done. We haven't been too prescriptive in how best to do that. That to some extent is a political choice between whether, you know, the savings are passed straight through to consumers or whether we build up this capability in terms of GB Energy and the equity stake in a portfolio of projects. But that is a relatively low capital way for the state to take stakes in projects, and that potentially has some attraction for a number of different reasons. Going beyond that, in terms of capital investment, as I mentioned before, you know, initially for GB Energy, I think it's about 8.3 billion has been ring fenced for that. I mean, that sounds like a lot of money, but it's not a lot of money in the context of developing large scale energy projects. And obviously the general fiscal environment is quite tight. So that being the case, then how best to deploy that finite amount of capital, you know, and our recommendations, perhaps not surprisingly, is that the state should be investing in the sort of more higher risk emerging type technologies or critical parts of the supply chain to try and crowd in private sector finance to try and accelerate those projects and to certainly help to commercialize some of those higher risk technologies. And of course, by doing that, the government taking an equity stake, then any upside associated with the commercialization of that technology or those projects and the international opportunities potentially could then accrue to UK taxpayers. And certainly, you know, I think the incoming government was very interested in the models around EDF, Ørsted, Vattenfall, etc., and the national champions, and to what extent is there an opportunity for us here in GB to create the next international champion around a particular technology, given how much we're investing. So that seems to make, you know, quite a lot of sense. You know, we had a big discussion with a number of stakeholders, and there's widely different views around whether the state should be just taking a bigger stake more generally in the sector, and if money wasn't a constraint, for example, or if we had a different way of accounting for investment type expenditure, then potentially there is an argument around lower cost of capital, and that could create savings for customers. You know, that's not a free ride either, because you're transferring risk from private sector to customers and taxpayers. But you know, certainly there is some attraction, or seems to be some attraction, if we can bring large sums of capital to the market. That could accelerate projects, it could help to crowd in, and potentially could create a dividend for customers further down the line. But in the current fiscal climate we're in, that seems to be a bit more challenging. In terms of who plays this role, another really interesting discussion. Obviously, we have the UK Infrastructure Bank already doing these types of investments. The Labour Party talked about the possibility of a national wealth fund as well. And of course, there's GB Energy itself. It's a very much an open question around where this investment would be channeled through. Certainly, we think GB Energy needs to have enough capital to be able to fund the development work that we're recommending it does. But whether GB Energy is the vehicle that invests in ports or in floating wind, for example, as a technology, or whether that's UKIB or an evolution of UKIP, that's not something that we got into any great detail of, but it's something that will have to be thought through in the coming months as well. So that was some of the kind of high-level conclusions around the role of the state as an investor. So at this point, I'm going to bring in Vikesh Ahuja, who is our one of our directors who leads our commercial advisory work, so is advising a lot of private sector players on investing in the generation markets here in GB. Good to get your perspectives, Vikesh, and questions coming from the chat on this role.
Great. Thank you, Duncan. Fascinating discussion so far, and I can see a kind of steady wave of questions coming through, which I'll kind of briefly cover. Probably the one key reflection for me is the reach of the state as articulated can be quite wide, from very targeted investment in de-risking new technologies to kind of investing in kind of established technologies. And I believe choices will need to be made quite quickly given the target in terms of where the state focuses its efforts, particularly with the kind of the constrained fiscal environment. Off that, kind of my first question is, would you agree that the state should primarily, at least initially, focus on investing in kind of new technologies which are less commercially viable, but have a major role to play from a decarbonisation perspective?
Yes, I think that is absolutely the case, and certainly what we were hearing talking to stakeholders, that is where people most value it. I think more generally, to some extent, we're a little bit surprised that people weren't a bit more averse to this more generally. I think the message was no one has an issue with more state investment in the sector as long as it's done in a way that speeds up decarbonisation and doesn't upset the level playing field. Because clearly, if we had a state-backed entity competing in a competitive CFD auction against a private sector developer, then that's problematic. So that's not helpful, and then you end up just displacing private sector investment, which is not the intention. So either through facilitation of new technologies or in some way to try and crowd in more investment from the private sector, that seems to be a good use of finite capital, rather than creating a state competitor to existing developers. That's not we don't think that's a great idea, and we don't think that's the intention of GB Energy, although there was always a risk that people assume that's what GB Energy would be. But I think GB Energy, we think, is going to be much more of a partner. It's going to partner with the private sector. It's going to be a facilitator. Yes, it's going to make sure customers get a good deal, but it's not there to try and be a state competitor with the private sector.
Yeah, I would echo that sentiment in terms of kind of a clear role around the boundaries of GB Energy and crowding in private investment rather than crowding out, which is kind of the perceived risk here. A couple of interesting questions. I think kind of Adam and Peter had a similar question around, is there a potential conflict in kind of GB Energy targeting high risk technologies and the value to the consumer? I mean, I have a view in terms of, I guess, because of the high risk technology, they're less commercially viable, but still needed to achieve decarbonisation. So there is value to the consumer, I believe. But keen to hear your views on, is there a potential conflict there from the state investing in high risk technologies and the value passed on to the consumer?
Yeah, whether it's a conflict or whether it's a trade-off, not sure. But I think, yeah, I mean, there's clearly a risk, because if you're investing in high-risk technologies, there's obviously a possibility that they fail, and then you're saddling taxpayers or consumers with cost. I think the one opportunity is that, the policy risk, political risk, is the gift of government. And therefore, if I'm investing in a new technology and I don't actually know if there's going to be long-term government support behind it, that's going to be much riskier for me. If I can see a government that's investing in this technology, it's got a strategic plan that features this technology pretty heavily, and I can see, what the potential size of this market might be, then that actually de-risks that investment for the private sector. So there is potentially a win-win here by eliminating some of that policy risk. It doesn't take away technology risk, clearly, so there's still a chance that the technology fails, but it does take away some of the policy risk. So I guess some of the thinking here is, this is why it's the overall package of these recommendations that we think potentially is quite powerful, because it aligns not just the kind of energy sort of policy and strategy, but also potentially the industrial strategy that could go around it, and certainly giving confidence in things like supply chains, and that potentially could have some value.
Yeah, agree. There's a related question, which I think you partly covered, but that trade-off between a high-risk technology, in essence, kind of means to some degree it's kind of more nascent. So kind of by kind of the state kind of investing in that also creates that risk of i.e. kind of losses of the technology not kind of playing its due role in decarbonisation. Do you have any kind of views on that?
Yeah, I mean, it's a good question. There's a possibility of some white elephants, and then throwing good money after bad, and mistakes will definitely be made, but we are going to have to bet on some technologies if we're going to achieve a decarbonised power system. Because if we don't, then we're going to have to wait until those technologies evolve over a slower time period. So there will have to be some bets made. We'll have to make more bets than we need, because some of them will almost certainly fail. But yeah, that is the trade-off.
Yeah, and I agree with that. Kind of, I think that trade-off is there also for a private party, and potentially kind of combining it with kind of investment by GB Energy in partnership can potentially kind of share that risk across kind of private sector capital and public sector capital. Okay, I think kind of let's move on. There are a few other kind of interesting questions there. One is around, as part of this work, did we consider at all the ownership of the gas grid and the potential to renationalize them as they run down? I probably know the answer, but kind of, Duncan, I'll let you kind of comment on that.
Yeah, so the gas question, and we haven't touched on it much here, I mean, is a really important one, because how do you manage the decline of it and make sure it's maintained, and when do you cut over? So that's a tricky investment proposition. Renationalization would be a simple solution if money wasn't the object. So but that may not be possible. In which case, how that is managed, how that's regulated, how we ensure that there's enough funding going to the gas grid to maintain it and safely operate it, is a challenge for Ofgem as well as it is for government. And it's there's always a risk with this, is that people are more focused on the new sexy stuff and neglect the fact that actually gas is still, and the gas network is still the transporter of the highest volume of energy delivered to businesses and customers, and will be for some time. It cannot be neglected. But I think, particularly for decarbonised heat, where it does require or can require local solutions that require quite complex development, again, this is a potential another use case for a GB Energy working closely with local authorities to actually develop things like local heat networks or community heat pumps and these types of things. So these projects that are quite hard to get off the ground organically, again, you could see potentially a role for GB Energy helping the transition away from gas to facilitate it.
Yeah, and I think this can also tie into that kind of as a planner role for the state, that system architect, that interaction between the power and the gas markets, the design of those, I think probably could be a consideration of how the NESO kind of thinks about its role.
Yeah, and it links to we talked about hydrogen and the offtake of hydrogen. We haven't talked about electrolysis yet, but again, really interesting, the possibility of electrolysis in terms of production of low carbon energy, but also balancing the grid and where it's located. to try and get all that to work through market signals to get the optimal outcome, it's going to be difficult to do quickly. And therefore, again, some more proactive decisions around if we are developing electrolysis in a particular region, making sure that that is then going to have an offtake for the hydrogen that makes sense economically as well. So yeah, these are the types of the joined up thinking that's going to be needed.
The more questions coming in, I'll probably kind of target a couple more and then kind of we'll move on. There's one kind of which came from Dermot, was around how do we incentivize the investment in renewables and grid infrastructure when the return on investment remains much higher for fossil fuel investments? I can probably just kind of share my views and kind of then Duncan, you can kind of build on that. It's an interesting kind of observation around fossil fuel investments. Clearly, they have made a lot of money in the recent past, kind of given market conditions, kind of given the aftermath of the Ukraine crisis. But through some of the broader work we've done, we've kind of seen that inherent uncertainty around the business case for thermal or kind of fossil fuel investments, even though they have a key security of supply role to play. So although they might have made kind of returns, significant returns in the last few years, I think the business case for investing in new fossil fuel, the uncertainty around kind of stranding risk, the role of gas as a transition technology, I do feel that there are quite a few uncertainties in kind of the role of fossil fuel investments in the future. Duncan, any kind of further builds from you on the return of investment fossil fuel versus renewables?
I mean, there's always going to be a spread of risk and return, and there's always going to be a spread of investors who want more risk for more return. So I think, if the market mechanisms are still there, then hopefully the market will decide what is the right return that's needed for these different projects. I think, obviously, where things have been difficult recently is, the rapid cost escalation we saw, particularly around renewables, and therefore, locking CFD offtake prices before supply chain lock-in, for example, has created a massive challenge and has really squeezed returns. But again, coming back to the pre-development role and potentially the single auction, by actually de-risking quite a lot of that early stage development and potentially designing offtake mechanisms that appropriately share the risk between the developer and the customer, you should be able to get whatever risk profile you want. I mean, the problem is you end up with a risk profile that people weren't expecting. That's a problem. But ultimately, as I said, there's horses for courses that, the market will decide what is the appropriate return for asset classes of certain types of risk. And there's no reason why you can't accommodate a range of different investor types in that.
Understood. One more, I think this is from Angus, which is, do you see the state investor role to be mainly about technology risk, or both technology and service provision market role risk?
I'm not sure I fully understand the question. I don't know, Angus, if you can elaborate, or is that going difficult still online?
I think that probably may not be possible, but maybe we can kind of take that offline and kind of answer that.
Yeah, I think definitely the technology risk. I think that was the main focus. I don't know whether maybe you're also alluding to types of assets that people might not want to invest in. So maybe that's unabated gas that might be needed on the system, or it might be strategic storage, or whatever it might be. There are certain types of assets that we're going to need on the system for security supply and operational reasons that aren't particularly loved in terms of the kind of the market signals, and that potentially is a problem. So again, there might be a role for the state to kind of own and operate those sort of bad bank type assets. But that is a possibility. But again, if money is constrained, then the alternative is just to make sure that there are the right market mechanisms to make sure that we do have enough backup on the system to make sure that we can operate it.
Brilliant, Duncan. Thank you so much for your time. I'll probably let you kind of cover the last leg of this.
Thank you, Vikesh, and thank you for the questions. So yeah, on to the last role, state as enabler. So the first of these, I guess, no surprise at all, is around planning system reform, which is clearly high up the government agenda, new government agenda, and potentially this could accelerate a lot of low carbon investment and deployment. Now, that doesn't come without significant downsides, and so whilst I think we are supportive of that, there also is the need to recognise the impact on local communities, and therefore, again, linking back into this a possibility of GB Energy playing a role in local energy schemes, making sure that local customers can see the benefit of those types of situations. So we think that is going to be quite important. As we alluded to before in our pre-developer role, we did talk about the possibility of auctioning off the right to develop projects in certain locations for accelerated planning, which we think is an interesting idea. I mean, that planning permission has value, and therefore, that value then needs to be captured by the state or the local community to make sure that they're getting the sort of just return for that. But I think that is quite a key part of things going forward. We haven't touched very much on the supply chain. I know Rob's coming in a minute, and he'll have a few things to say about the supply chain. But and it came up a lot in our conversations because it's such a hot topic. And we thought quite hard about what additional role for the state could be in promoting the supply chain. I think first off, we just thought that the greater visibility and stability created by a proper strategic plan with good forward visibility in its own right would be very valuable in addressing one of the root causes, which is how much stuff are we going to be building of different types. So that may well be a key benefit. But on top of that, what else can be done? Obviously, there's quite a few initiatives already in play in terms of standardization, coordinated procurement, things like the giga funding, sustainable industry rewards. All of these things potentially are going to help, but they're all quite new, so we don't know what the impact of them is going to be. We talked about the possibility of the state investing in key parts of the supply chain, and that may well be another key part of it as well. So there's lots of different things that are happening on the supply chain, and it may well be that we have to intervene further, but at this stage it's quite early to say with all these other things changing. And we still think the single biggest benefit is having much better visibility of what's going to be deployed on the system going forward. But that's an interesting discussion debate, which I'm sure we'll come back to. And we also talked about the possibility of more coordination around innovation. We have the Net Zero Innovation Board already within government, so that's doing a good job. But to what extent could we need more coordination, and certainly aligning it more to the strategic plan? So we're actually investing the innovation funding into the types of technologies which are featuring in the strategic plan, and making sure we're getting the best potential value from that investment for customers. And then finally, in this sort of category, and it was a bit of a catch-all for other ideas, the possibility of having a public sector energy procurer. Now, to some extent, this does already exist in pockets. So in Scotland, for example, the partnership with EDF, the Crown Commercial Service buys a lot of power on behalf of the public sector elsewhere. But again, it's still a little bit disparate. So potentially coupled with the role of the state in developing projects on public sector land, that body could also be looking more holistically in terms of the overall energy requirements for the public sector in order to bring those projects forward. And the public sector consumes about 4 or 5 terawatt hours of electricity. Yeah, that's a large load, and bringing that to market potentially could anchor quite a few low carbon projects. So we think there is scope for greater consolidation of that role across the public sector, and consolidating the skills such that GB Energy, if it plays that role, could be talking to the MOD or the Forestry Commission, or whatever it might be, and saying, look, what is the potential? Can we help you develop projects on your land in a slightly more coordinated way? And if not, can we buy low carbon power and energy on behalf of your organisation in a way that we can kind of get that economies of scale by doing it more centrally? So that was just one of the ideas that was out there as well, potentially for GB Energy to play. So a few different ideas there. There's a little bit of a mixed bag, but I want to bring in Rob Gilbert now to help discuss this, particularly around sort of some of the supply chain challenges. So Rob, one of the fellow partners in Baringa, he led our work with DESNZ recently on the supply chain constraints in renewables and grid, and has lots of experience both with government but also on the developer side on some of these issues.
Hi Duncan, nice to join you, and thank you for letting me. As you've mentioned, the supply chain is a major theme for the industry, and you've sort of touched on the report that we did for DESNZ that identified quite a number of constraints in key components and skills, and obviously included several proposals. How do you think your proposals in the report will help some of the supply chain challenges, and how do they work alongside other ongoing initiatives in industry?
So as I said, I think the single most significant thing would be the greater visibility of the forward plan, and I think by, for example, taking offshore wind, which is obviously one of the key areas of focus of that report, one of the key challenges is not knowing if you're going to be successful in a CFD auction or when you might be successful, and also the difficulty in locking in the supply chain before the CFD, and obviously with the cost inflation, that's been problematic. So by having a forward plan with the sequencing of what projects are coming to market when, I mean, again, you don't necessarily need to know who's going to be the ultimate developer of those projects, but you can see that there will be these projects developed in these locations. We think over the next 5 to 10 year period, it gives the confidence to the supply chain to say, right, well, okay, we can start developing. Now, again, this is all a little bit hearsay at this stage. It's kind of, we assume this is the case. I mean, the proof will be in the pudding, but it seems to be that could help to unlock more investment in the supply chain with greater confidence. I mean, I'm interested to get your thoughts on that, because you're much closer to the day-to-day of these challenges.
I'd completely agree. I think confidence in the forward view is so critical and came up so frequently as a topic when we were studying the sector and putting together our report. I think the sort of the confidence to invest is clearly a major theme for supply chain businesses looking to get into the UK market. So I think that level of certainty, that forward view, is would be welcomed by a lot of people. And I think the other recommendations, I guess that I've got some questions to come to in the chat, but if I can sort of indulge one more before going into those, I think it's you obviously touched on the role of a strategic innovation coordinator, and I'd just be keen to understand a few more of your views around how that entity might operate and the role it might play in supply chain innovation, but also, I guess, broader innovation for the sector.
Yeah, and we had some quite divergent views across stakeholders around how well this was working. So I think the sort of jury's a little bit out. I mean, there's definitely been attempts to try and coordinate and to align better to kind of strategic themes across the industry. But there are various different sources of that innovation funding. Some of it's coming through the network innovation funding routes, the EKR, etc. And it's allocated in different ways. So it almost just requires like a step back. How much as a country are we spending on innovation? What is the business case? How well aligned is that to where we want to go in terms of the strategic vision and the need to accelerate deployment of certain technologies? So, I mean, I'm loath to kind of say, we need a review of innovation. I mean, it sounds a bit kind of obvious thing to say, but the fact that not everyone we spoke to thought that this was working perfectly suggests that there may be an opportunity to try and streamline this a bit better and coordinate it a bit better, if possible.
Definitely. No, very interesting. We have a question from Alex, and I think we might have some questions that sort of come through as a bit of a mop of actually all of the questions that have come through the course of today. So we may talk about the role of the state as an enabler, but I think we might ask you to jump backwards slightly as well, Duncan, to go through some of these questions.
We've got 10 minutes or so, yeah.
So if there's time, we'll come on to a couple of maybe other supply chain questions I have for you at the tail end. So Alex has asked, where does community energy sit in this? Is it totally separate to the themes discussed?
So yeah, thanks for the question, Alex. So as I mentioned, the scope, we weren't focused particularly on this question because it's more of a focus for the local power plan and the local power plan team. And so the Labour government has announced the 3.3 billion that's going to be targeted into that, and that will be very much centred around community energy. And that could be spent in a number of different ways, that money, whether through direct investment in projects, through loan guarantees, through loans, through capability building. I think that's all still to be determined. So that was the main focus. I guess where the local power plan kind of interacted with our world was, how does the local project development work with the strategic plan? Because as I said, we don't want the strategic planner to be determining at the local level individual projects in a region it knows nothing about, but it has to be sympathetic to what's going on on the ground. So there's no point in the system architects saying we need 95% of all of our energy from transmission connected projects if we've got 30% of our energy being connected to distribution networks. So they need to be conscious of what's going on. So that was the point I was trying to make around the sort of top down, bottom up. These two things need to meet in the middle. So apologies, Alex, and I know your world is very much focused on that side of things. We haven't majored on it, but simple answer to your question is that that's been sort of picked up more in the local power plan thinking.
Fantastic, thank you, Duncan. We have a LinkedIn user, an anonymous user, that's asked the question, sort of identifying some unresolved questions about GB Energy's role and the scope of activities. What are the next steps for GB Energy and HMG heading into 24-25, which I guess assuming is probably more into next year and beyond? Quite a broad question, that one, Duncan. So you might have a few views on that one.
Yeah, so I think, obviously the government's been in place for 3 weeks now, and it's step by step in terms of how much the flesh is coming onto the bones of GB Energy. I guess in our work we have laid out what we think the footprint of GB Energy could be and some recommendations. Obviously some of those have fed in already into the government thinking, for example, the partnership with the Crown Estate, but not all of the things we've laid out today are government thinking. We think they're good recommendations, but it's not the only way to do it. So there is a lot more to think through in terms of how GB Energy, either the footprint we've got for it or a different footprint works in association with, as you say, Treasury, NESO, Ofgem, etc., and private sector. So all we know is they're working very hard. Things are moving very fast, but it's still not fully clear how it's going to end up. But I think sessions like this hopefully are an opportunity to kind of get ideas out there and to get the industry engaged and thoughts and challenge and stimulate ideas. And I know, they're very keen, and DESNZ are very keen to try and, make sure that, it is potentially quite a significant shift. People get to sort of understand and debate and input into it. So it's not for us to say what the next steps are for Treasury or GBE, really. It's very much for government to say that. We've just laid out what we think are some good ideas. We recognise that they're not fully fleshed out in all areas. We recognise there's challenges there. There's an awful lot of devil in the detail, but as a kind of a stake in the ground, that's what we try to do with this work.
Fantastic. And I liked your point earlier on, actually, about the sort of future potential roles into some of the infrastructure investment in ports and other areas, because I know certainly the businesses in the supply chain, and as we move into some of the more sort of nascent technologies like floating offshore wind, are very interested and very intrinsically linked to some of those larger scale, more infrastructure-led investments. So very, very exciting time, I think, for this piece of work to have been done. I think Adam has a point that takes us probably back, well, partly because it covers the role of the enabler, the role of the investor, the role of the planner, probably all the way through the entire report that you've done. So what role, if any, Duncan, do you think there could be for GB to tackle what is likely to be the biggest bottleneck to electrification and renewable deployment, the build out of the future grid? So not a small question to finish on. That's, I guess, certainly a hot topic.
So I think in terms of the system architect role, we've very much suggested that's an extension of the NESO's role. So we don't think GB Energy necessarily is going to be the system architect or shaping things. We think GB Energy is going to be pre-developing projects that the system architect is identifying, and vice versa, suggesting projects alongside the private sector. But we don't think GB Energy is going to be the one that is going to be actually responsible for the strategic plan, the network planning. We think that's very much NESO, the TOs, DNOs, etc. So, but that's not a given. I mean, of course, they could play a bigger role, and certainly early on, we did wonder whether the system architect role sat within GB Energy. And maybe come back to Angus's point, which is, would that have been a better separation of duties? But I think, I think as a developer and an investor, to us sort of sits together. There's always a risk that GB Energy just becomes a hold-all for everything, and it's a bit of a disparate set of stuff. So we've mapped out what we think is a sensible footprint for it, and keeping out of that system planning role. Obviously a key contributor to it, but not actually responsible to it, because but there is a different, there's a CGB model. I mean, you could renationalize everything and go back to where we started, but that's not. We certainly wouldn't recommend that. We don't think that's feasible at all in the current environment, and we're not sure there is any benefit in that at all, and certainly isn't going to help us hit 2030. So that's why we've tried to think about GB predominantly as a developer and investor, as a facilitator of projects rather than anything else at this stage.
Fantastic. Thank you, Duncan. I think I might be out of time for this section, so I'm maybe handing back to you and Ravi, I think.
Okay, that's good. Thank you for all the moderation and all the comments online, which is great. So I'm going to leave it there and hand back to Ravi just to wrap up and give his sort of closing thoughts and observations. So over to you, Ravi.
Thank you very much, Duncan, and thank you everybody for a fantastic set of questions. I was listening and I had a few reflections that I just wanted to share. One was about which are the biggest ideas in this piece of work, and when you think about the different roles of the state as planner, developer, investor, which do we think will have the biggest potential impact? And in some ways, I think that the first dimension of the state as planner could have the largest impact of all, because greater clarity is important, A, for the supply chain in terms of their confidence, B, in terms of actually locating assets and grid infrastructure in the right place, and 3, clearing away some of the kind of barriers to doing this quickly. So you could well argue that role of the state as planner, which is already a transition we're making with the NESO, but we're suggesting goes further, I think might be the most transformational. I think the second role as pre-developer, it will potentially speed up the process, potentially lower the cost as risks are managed by the right players, and maybe inframarginal rents are removed. But the actual savings are substantial, significant, but they're probably not game-changing, perhaps. I think the third dimension, the state as investor, in some ways with the actual funding envelope that's currently with GB Energy, there are constraints about how much difference you can make with a relatively small amount of money, given the capital intensity of this transition. I'm surprised that we've not actually touched on the question that usually comes up in these debates, which is about the fiscal rules. Duncan, you touched on it, but it is an obvious point to make, which is we are going to be investing in net zero infrastructure, either via consumers or via taxpayers. So unlike a hospital or a road, this is going to get built anyway, and we're going to pay for it. The only question is who and in what form. And I do think that difference and the fact that you've got a guaranteed revenue stream through CFDs makes it very, very different to roads or hospitals. And therefore, that should be reflected a bit in how we think about these questions in the fiscal rules. I just wanted to mention sort of 3 thoughts on next steps and how to take this work forward. A number of countries were mentioned that we could learn from: France, Ireland. We mentioned Denmark in the report, the Netherlands, Ireland, Australia. And I think mining those case studies in more detail and understanding some of the challenges they've faced would be hugely useful. And the second thing is, as Duncan said, the devil is in the detail on some of this. The government has accepted some of the recommendations, for instance, the Crown Estate role in pre-development, but whether they go further, for instance, in changing the double auction mechanism that currently exists, that's something that will have to be worked through with with industry. And I think it's really important there is a kind of open conversation now on doing those things. And then the third thought was about the degree to which you set the parameters quite in a quite defined way for this organisation versus allowing lots of room to be flexible and pivot. We've had some examples on this call of use cases that we probably haven't thought of, like the gas grid, or ones where we've talked about but only very briefly, such as on heat networks, both of which I think have got potential. And you probably want organisations to pivot and adapt as they grow and see new problems. Equally, as I think it was also covered, you do also need certain parameters so that other players, other parts of the system can know where they stand and ensure that they feel confident in investing and that they're in a complementary relationship, not a competitive one. So I think that challenge of providing flexibility to pivot and adapt while also providing some parameters is also something to consider in the next steps of the design. I'm going to leave it there. I just want to say, again, extra thanks to Duncan and others from Baringa and for all of you in some of these questions. There's lots of work to continue on this, and we'll be continuing to engage with some of the detail with governments and hopefully with many of you on this call. So thank you very much.